Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Thursday, February 6th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn down a quarter at $4.93. March soybeans are up 5 1/4 at $10.62 1/4, and March Chicago wheat was up 2 at $5.74 1/4. This morning's weekly export sales report was out. Corn, real solid week for corn, almost 1.5 million. Upper end of the range was looking for that. Soybeans, real lower end of the estimates, real wide estimates, 300 to 1.1 million. It came in at 387,700. Solid for wheat, 438,900. Meal sales above the top end of the range, 530,600. And oil, 2,200. We've now gone through 3 of 19 crop insurance discovery prices for our discovery period. We've got corn at 467 1/4, and soybeans are at 1066. Good morning, guys. Coming into this morning, talking a lot about Argentina getting some pretty good rains in some certain areas. A couple of spots got in the 3-inch range, and then the euro this morning is got a little wetter for the 5 to 10 days. So perhaps a little bit of our break yesterday focused on weather. Justin, we were talking before the show. It's nice to see on the corn side. We're mixing it around in terms of countries buying corn, which is a good sign, being competitive. So maybe a few thoughts there to start the morning, and then we'll throw it around the room.
Yeah, you look at, corn, we're selling it, to a variety of different countries. It's not just all Mexico. So you're seeing a lot of, look at Japan, Korea, Guatemala, Colombia, Panama, Netherlands, Middle East, Europe. So just shows that, U.S. is the best priced corn still out there. I think issues with Ukraine and until really second season corn, safrinha crop comes, fully online, call it, mid to end of the summer. I expect that to stay. So we're kind of running record pace on exports. Good to, the question we've had for months now is, will it last? Is it front loaded? So it's good to see continued demand for corn even after this quite large rally that we've had. So we do remain the most competitive, and so that's a good sign. Beans, you could see, just continue to tail off. China took a couple 100,000, pretty weak bean sales. So you can tell that we're full South America right now as far as competitiveness. We're just not competitive. So that's going to continue to struggle. Positive there is that, oil sales have been really good. Today was kind of nothing. India canceled some oil, but it was still a positive number. Meal was really good. So, meal's been trying to price itself to move. We continue to run record crush with all the new facilities that have come online with, obviously all the biodiesel demand. So meal's been trying to price itself to move, which it's done. So it had to get to cheaper prices, cheap basis levels, record low basis levels in some areas, but it's doing its job to move it. So I think, trying to move the meal is what I would do if I had to move meal. Try to, get it out of the country, export, do what you had to do, before Argentina and some other competitors come online. So, yeah, pretty positive there on a few of these commodities. Wheat's just kind of okay. But yeah, corn still, we're still selling a good amount of corn at elevated prices. So it's kind of hard to say that fundamentals aren't keeping up with the rally here, when we're already tight. So there's no signs that we're really rationing. Ethanol demand's still been really good. Corn demand's been good. So
very good.
I don't think we've run away from the fundamentals. I guess my point. Sometimes you see these markets and they take off and everything collapses and you just shut off demand. And I'm not seeing that right now. I mean, beans, you could argue yes. certainly. But beans act well. Beans are the surprising one to me. Just they act well. We've kind of thrown a lot of bear stuff at it. We've had a good break yesterday. We'll see if this little bounce here holds or not. We're kind of trading in between some kind of big moving averages. We tested that 200-day, kind of closed above it, failed yesterday, and then kind of bounced off some moving averages overnight. So we'll see if it gets its legs again or not.
Oh, very good. Dustin, what's on your mind this morning?
Just same thing. We're still kind of waiting on some very large geopolitical headlines for direction. Trump and Xi not meeting following the Chinese retaliatory trade war tariffs. That was probably part of that weakness as well too. When you talk about South American production, yes, we're getting decent rain, but it is like Feb 6th for Argentina. So how much damage has been done at this point? I think that's a real question. If we're 5% below trend line, that could be that just tightens things up on an already very tight situation. And of course, we don't have the best start to Safrinha corn yet. I think there's a reason why the funds they flipped so many contracts from short to long. They didn't seem to blink during the start of the trade war. Everyone has been talking about how wrong they are, but they've been probably the most right market participant for the last year. And so I think it's still there's a very strong conviction by both bulls and bears right now. So I'm just very excited to see insurance prices established here. First 3-4 days at least to start decent. We'll see how the rest of the month finishes out, but that's my main thing is just getting to a spot where we feel comfortable, let the chips fall where they may a little bit, enough sales, enough insurance. I wouldn't be surprised either way, right? Like that China digs her heels in and we go to a kind of a drawn out trade tariff battle a month from now, or, they try to avoid, pushing their economy into, downhill when they clearly have a lot of things that are going wrong. We've got their 10-year rates are extremely low. They're in that same, rush to the red light for AI and trying to, compete with the U.S. on that. So any sort of major economic setback that happens in 2025, I think would disrupt that to a degree. And they have a lot of incentives to try to make a deal. I think that a lot of the bears that I see online that are super convicted would be completely taken off guard if all of a sudden we have another phase 1 trade deal in our hands. Like what does that mean? Is it another 2021, 2022 where prices go way higher than we think? It's possible. I'm not predicting that, but I just want to keep everyone in an open mind that we can't predict what's going to happen there, and nobody can. So
what's interesting, Dustin, on beans, I was thinking about it driving in today. If you look at like the ratios, we know that old crop ratio, beans divided by corn is, keeps making kind of new lows, had a little bounce, but it's low by historical means, 2.15. That really doesn't matter once you grow the crops, obviously. But if you look at that and you look at, new crop ratio, obviously it's the lowest it's been in a while. You talked about in the letter. It's an interesting, it's at 2.27 to 1. The 10-year average is like 2.44, 2.42, somewhere in that range. So it's definitely trying to buy corn acres. We've talked about the difficulties with stubborn cost of production, and it'll be an interesting year to see where that plays out. But what I find interesting is that the global bean balance sheet's still pretty plentiful. Like maybe Argentina's a little tight, but the Brazil crop's going to be big. We can argue what that number ends up being, and they're going into harvest. But that we start carrying these inverses. If the market's looking at losing a decent amount of bean acres, and we've got plenty of old crop supplies, it's interesting to me that the market's been able to hold these inverses in beans.
Yeah,
that's kind of one I don't understand. You'd think it'd be led by new crop beans if it was just a general inflation type.
Right. 26 over July-Nov right now. Absolutely, it's crazy.
Well,
Yeah.
Justin, is that just money and outside stuff? Not really.
Yeah, it could be. I mean, if you
Mhm.
look at March, July, it's at 30 under, right? So
Mhm.
there's a good carry from March to July, so that as we've rallied, the cash market hasn't been able to keep up. Maybe there's enough spec money in there that's willing to, just be long nearby contracts.
Mhm.
So I don't know. It's just kind of an interesting setup. So
Well, I agree with all that, and I mean, like the inversion started. They were there basically all last year, and so it was like it's especially weird going into that January report when we did have pretty good weather all around to that point. And it's like, well, I understand like why you probably caught a lot of people off guard when you lowered the U.S. production as much as they did,
mhm.
but like, why was it inverted going into the report in the first place? Something's up. So
Yeah, so that's just kind of a, I get the corn inversion. Maybe they feel the balance sheet's getting smaller. I just find that hard to believe with such a big South America crop, but we'll see. Maybe crush demand's so good too. Maybe we're just have enough demand domestically to keep somewhat of an inverse. And as you get
Isn't
closer and closer, right, you go to a carry, right, as you get closer to expiration. But anyway,
is it
just
like
an observation, not really a.
yeah? Isn't like one of the old favorite trades like old school is just you could just bull spread July-Nov and hope for
Yeah, I
hope for
mean
something crazy to happen.
yeah, 100%. I mean, that's when markets go up, you have a lot of bull spreaders. It's a cheaper way to get long in some people's opinion. We've seen that backfire a lot of times, right? Especially in a high interest rate environment and having to carry a long position. You get beat up. I mean, case in point, if you just stayed long the front end and then you had to roll to May, right? You give up 15, 16 cents
Yeah.
there. So it's a tough one, but it's people still like to do it because you're playing for if there's a problem. Like look at corn. Corn spreads were wide, now they're big inverses. So I do think there's some just spec play to that.
Anything wrap up the earnings here this morning, guys? We're good. All right, very good. Rylan, real quick. So one thing we saw some bird flu pop up in dairy cattle out in Nevada as a headline here this morning. So that's kind of interesting. The new requirements and testing, I think, is what they said caught it because it was kind of trace amounts. But anyway, also continue to see big moves in cattle and hogs have battled back. It seems like from the initial tariff talk. So what are your thoughts here this morning?
Yeah, just looking at the bird flu strain, this is obviously a different strain than what we've seen before. Not a lot of details about the effects overall. It just seems like this is the D1.1 strain, and it's different than the B3.13. So I think there's just more details about these genotypes and their influence on, the animal well-being. But obviously, it's going to be a developing story. Everybody's going to watch it. It was in Nevada, so I think if it was in an area that was a little bit, I don't know, is that more market related? I'd say one of the 5 area regions, it would be a bigger deal, but we'll see how the market reacts. The last time something like this cropped up, the market saw it pretty negative. So just something to watch, I think, overall. But it's been a nice little recovery. I think both hogs, cattle, both just kind of a little bit more of a risk on mentality. Like we don't need to worry about tariffs or any of the implications from that in a lot of the meat markets. But no, we're still waiting for Southern cash to develop on the cattle side. We've seen so far cash at 207 to 208 in the north and 328 for dress. So that's about $1 to $2 lower. And the futures have corrected. So I think at this point, all eyes are going to be watching to see if the Southern trade actually develops a little bit better than that. So we'll see. It's not like asking prices right around 208. So right now, it just doesn't seem to be a lot of confidence in that. But I think a lot of that's going to be determined by the action on the board. Plus, we saw a big drop in beef prices. It was a little bit of a shock too. So, we're kind of coming into that weaker kind of demand environment in the next couple weeks. seeing a break in beef, I don't think it would be a big surprise here, especially with the price levels just kind of sitting where they're sitting. And if cash markets are going to start to drift lower here. So we're just keeping an eye on that for now. But on the hog side, it's been a nice recovery. You had really good export sales, 50,700 metric tons, mostly from Mexico, 21,000 tons of that. So it doesn't look like the trade's going to really stop there. At this point, but there is this cautious kind of environment to see if perhaps the trade war starts to get rekindled in the next few weeks. So it should be a pretty volatile trade in hogs, I think, over the next couple months.
All right, appreciate the update there. Just coming into the open here, we got March corn down a quarter at 493. March soybeans are up 3 at 1060, and March Chicago wheat is up 2 1/4 at 574.5. We've talked about it ad nauseum, and Jack will have more info in the outro here. But we are running a real special offer here through April 1st. I know we talk a lot about crop insurance, integrating those decisions within your marketing. Give us a call. We'd love to visit with you, share with you some of our ideas and thoughts. We're certainly really focused on the crop insurance decision that's coming up here in the next couple of weeks. So feel free to reach out. We'd love to visit with you. Also, tomorrow morning, we'll have Fun Fact Friday with Brian, Super Bowl edition. So it should be good. We're looking forward to that. Be sure to tune in. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Keep you up to speed on everything that's going on with AgYield. And again, thanks to everybody that supports the show. We're doing this live every day that the markets are open, streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'd look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.